So it means that the buyers want to buy more than the sellers want to sell, and so the price discovery is occurring. If I wasn't a 25-year veteran of godling, I call it, holding gold and silver, I'd be uncomfortable getting in here, although I would certainly also be uncomfortable selling, because I don't know if the chaos in the metals market is foreshadowing a big correction or some sort of blast off that will run away from anyone who's not in, or anyone who's trying to get in it. And if all of a sudden gold is at 6,000, you're not going to want to buy it.
In recent months, gold has reasserted its dominance as the world's most reliable store of value amid rising financial instability. Analysts like David have emphasized that investors are turning to gold not merely as a hedge, but as a necessity in a system strained by debt, inflation, and currency debasement. With central banks across the globe accumulating record tonnages, David points out that the metal's steady rise reflects growing mistrust in fiat-backed financial structures. Gold is no longer just an asset, it has become the foundation of confidence in an increasingly uncertain world. According to David, one of the most underreported trends of this decade is the unprecedented pace of central bank gold buying. Nations such as China, India, and Russia are expanding reserves as part of a long-term strategy to reduce dependency on the US dollar. David explains that this quiet accumulation represents a shift in global power dynamics, where gold is once again emerging as the neutral settlement tool between competing economies. The sheer consistency of these purchases shows that sovereign wealth managers view gold as a strategic reserve of last resort, something no paper asset can replicate. David has consistently argued that gold's true strength lies in its ability to expose the weakness of fiat currency. While official inflation numbers often appear subdued, the real loss of purchasing power is much deeper. In this environment, gold stands as a mirror, reflecting the silent devaluation of money that policymakers refuse to acknowledge. David notes that even modest increases in gold prices reveal how investors are quietly hedging against systemic risk, while institutions are positioning for what he calls the great repricing of real value.
So, first of all, I noticed you picked up correctly more aggressive buyers than sellers. People often say more buyers than sellers, but by definition, there's exactly the same number. So it means that the buyers want to buy more than the sellers want to sell, and so the price discovery is occurring. If I wasn't a 25-year veteran of godling, I call it, holding gold and silver, I'd be uncomfortable getting in here, although I would certainly also be uncomfortable selling, because I don't know if the chaos in the metals market is foreshadowing a big correction or some sort of blast off that will run away from anyone who's not in, or anyone who's trying to get in it. And if all of a sudden gold is at 6,000, you're not going to want to buy it then. And so I personally am not buying any more gold or silver, because I've got plenty. And my cost basis, as you know, is triple digit, like 270 up to 457 is the one I remember the best. And so when it goes up and down, it's up and down in this very lofty zone that I can live with. Although easy come, easy go is by no means applies to Wall Street. There is no easy come, easy go. It's easy come, horrifyingly go. So with that said, I don't know what's going on. The volatility, not the vol per se, but the volatility tells me that something's got to give, but I don't know give in what direction. I got tons of answers that describe things that have been around for a long time, and precious little information about what's happening right now. So it could be that this is a butterfly flapped its wings, and it just happens to be time, right? It's when the volcano decides it's time to let go, and the earthquake decides it's time to let go. Then anything you find to explain it's likely to just be a coincidental, maybe trivial proximate trigger. It was time for it to let go, and so we'll blame Tricolor, or we'll blame limited brands, or we'll blame whatever, but it was just time. It seems unlikely to me. That's a bet I'm not making right now. I should add, there is a steady, I think, positive push because of that began with the Ukraine war when we weaponized the dollar. We weaponized assets and said, if you piss us off, we'll steal them from you. And so Putin et al. Sort of triggered I think the next run up in gold. I saw a plot, to the extent you believe anything on the internet, of Poland's gold acquisitions, and 2022 it just did a hockey stick. So everyone got the message that piss off the U.S., you're in trouble. And what we also know is that you can piss off the U.S. without knowing you're pissing off the U.S. We're a bit of a bully now. I mean, there's at least one other country that's a bigger bully, but we won't talk about that. Not on YouTube. So I think there is a sort of a natural bull market in the metals in play because I wouldn't trust us. And I think this idea that Trump's onshoring businesses is bullish for America is right if you ignore time scale, but I think the time scales, so let's say Apple decides to build a plant in the United States. How long before they put out their first phone?
It's going to be a while.
8 years?
Yeah.
Trump's not going to see it. And by the way, all these tech guys who promise, we'll spend $500 billion in the United States, they know by the time they have to admit they lied. Trump will be at best a lame duck. So sure, why not? I just saw J.P. Morgan talking about how they're going to dump trillions into the U.S. economy, and I realized as I read the article, it was sort of grift from start to finish. If you read carefully what each sentence said, it was really about grabbing money from the U.S. government, and it was kind of a nightmare scenario.
Across multiple interviews, David has linked the growing appeal of gold to discussions surrounding a potential global monetary reset. He believes that future trade and debt settlements may rely increasingly on asset-backed systems, where gold once again plays a stabilizing role. As confidence in government bonds deteriorates, central banks may be forced to reintroduce gold into their balance sheets as collateral of trust. David suggests that this transition is already underway, quietly engineered through bilateral agreements and regional financial alliances that bypass the traditional Western banking model. Beyond central banks, David notes a rising tide of institutional adoption that signals deep structural changes in the market. Pension funds, sovereign wealth funds, and private banks are diversifying into gold as a defensive measure. The trend reflects a recognition that paper wealth, stocks, bonds, and digital assets, can be vulnerable to both policy risk and liquidity shocks. In contrast, gold offers permanence and independence from counterparty exposure. David emphasizes that this reallocation phase could become the most significant shift in portfolio strategy since the 1970s.
Everything's correlated now, so it doesn't seem to be drawing away from it. I put out a tweet the other day that asked for what the hell's going on with gold and silver. And I explicitly tried to wave people off of saying, well, we're debasing the currency. But there's 10,000 things that are wrong with the system. And they've been around for a very long time, and so those are not the answers I was looking for. I was looking for someone to tell me what the sort of the emergent behavior of the last few days, few weeks, whatever you want to call it, backwardation, all that stuff. What was there a trigger for that? I think it's possible. It's something like maybe the subprime loans are starting to blow up. You got Tricolor and Limited Brands, and another one I read about. Guy called me this morning from London who is clearly a prominent guy and I believe highly connected. And he said there's a lot more of those blowing up right now under the surface. So it's conceivable that it's one of these things where we're going to read about in some number of weeks, months, about what it was like in 0809. I knew the markets were in trouble. I knew the system was in trouble in 07, thanks to a woman named Tanta who was talking about it in a blog. And it was literally one woman in a blog that was informing the bears that things were in a state of total chaos under the surface. And the market ABX index had left par, and a handful of people seemed to be watching that. And then seemingly months later, the two internal hedge funds at Bear Stearns blew up, and they were only $600 million apiece. So on the surface, that seemed irrelevant, but it was really the first of many, many, many explosions. So maybe Tricolor and Limited Brands, those guys are the first of many, many, many explosions, is conceivable. I have this obsession now over this bubble being misnamed. Some people don't call it a bubble. Others just call it a normal bubble. Some call it an everything bubble. I think it's a complacency bubble. It's kind of I'm sure I'm not unique in using it, but it certainly isn't being used by others that I know of. And the complacency bubble is everyone seems to know the markets are completely insane, but they all think that somehow they will be protected. This isn't just I'm standing by the door and I'll get out when I can. This is more the Fed will lower rates and they'll do this and we'll be fine and it'll recover and don't worry about it, even though they're insane. Now, every other bubble that I know of, there was a euphoric component, whether it was 29 or the Nikkei in 89 or the dot-com bubble, even the housing bubble in 07, there was this euphoria over everyone, the American dream was finally coming to the common man. This one doesn't have the euphoria, in my opinion. It has the mania, right? It has a lot of capital flowing into stupid stuff, but the AI story looks about as authentic as Charlie Kirk's assassination. Everyone knows there's fundamental problems with the AI story, and I read somewhere that said that the entire growth in the GDP is just the AI build out, and if you take away that, your GDP is not growing. And I'm going, what does the AI build out have to do with GDP at this point? How does that create jobs? How does that create? What's that do for 99.999% of us? This is not, it's not a brick and mortar kind of thing. It's all done on, round trip financing. It's done on vendor financing. It's done on huge amounts of debt. The Mag 7 supposedly have burned down their balance sheet to zero collectively now. I haven't confirmed that, but that came from Jesse Felder, so I'm going to take it at face value. And so we're putting hundreds of billions, trillions of dollars. I saw an estimate this morning of 10 trillion over the next, decade into a build out of a technology that, unlike interstate highways and railroads and you name it, cell phone towers, has a life expectancy of a fruit fly. If you put $1 trillion into AI, in a couple of years you'll be having to put another $1 trillion into AI. So the Mag 7 has gone from huge profit margin, overvalued companies, way overvalued companies in my opinion, to capital intensive like car companies, capital intensive companies that are going to have to keep pumping capital in over and over and over to just keep up with each other. And so this smells very bad to me. And I'm admittedly the biggest bear on Twitter, so.
Looking ahead, David predicts that the coming years will mark a historic turning point for gold, one not driven by speculation, but by necessity. As global debt spirals beyond control and fiat currencies lose credibility, the world will be forced to return to tangible assets as the foundation of value. David foresees gold being revalued sharply higher, not through market enthusiasm, but through systemic correction. In his view, gold will transition from being a passive store of wealth to an active pillar of monetary stability, potentially exceeding all previous price records as confidence in paper markets erodes. He believes that within the next decade, major economies could move toward partial asset-backed currencies, with gold quietly anchoring this new system. When that shift occurs, David warns, Those who hold gold will not merely profit, they will preserve purchasing power in a world where trust itself becomes the rarest commodity. If you found this analysis valuable, don't forget to hit the like button, subscribe to the channel, and share your thoughts in the comments below. Your engagement helps bring these critical discussions to more people who need to hear them.